JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 30th of December, Friday, 2022. So yep guys, welcome to this Friday's morning session, the last trading session of 2022. So yep, the next time we catch up, it will be in 2023, guys. So yeah. I hope you're kind of excited for the new year. But look, as always, before we go further with this video, we need to quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can always check out for more information about us. So guys, that's it. Let's have a look at the charts. The first one I want to pick up here is Nikkei 225. It had a short day today. So yep. Oh, sorry, didn't have a short. Australia had a short day. I'll get to ASX 200 in a bit. But yeah, Nikkei ended the year basically on this upside line taken from the low of the 9th of March, which is also the lower side of the triangle here where we are currently trading in. So look, what I talked about previously was that in a way, if we continue to trade above the above this lower side of the triangle, then we might see a little bit of a rebound here, or push back up. What I said yesterday, I would maybe prefer to see a push somewhere above the 26,620 territory right here, in order to get a little bit more excited with the upside, maybe potentially then aiming for the 200-day EMA. But of course, don't get me wrong, it will be quite interesting to see how Monday will open up, yep, it will be interesting to see which way we're gonna go here. Will we sell off or will we rebound? Of course, all eyes are on the US session today. It's going to be trading as normal, as usual. We don't have any events coming out today. In general, the economic calendar looks a little bit on the quiet side, but let's see how the sentiment rolls, and if we somehow rebound in the US market, then yep, we could see maybe a follow-up here in Nikkei, and Nikkei could push, nicely to the upside. Now, in terms of where we ended the year here, so if I go all the way back to January, this is the one. Let me just go here a little bit. So this was the 30th of December, also the last trading day of Nikkei, yeah, we opened up around here on the 4th of January here at 29,098, and look at this, guys, where we have ended. We have ended well, basically quite below the opening price. If to put into percentage perspective, where's that little line here where I keep missing it all the time? Just bear with me one moment. There we go, price range. So if we take it roughly, we'll see that we have ended with around 10% loss. So Nikkei ended the year roughly with a 10% loss. Look, it's not bad, however, not good as well. So I would say it's somewhere neutral, and yeah, let's see how other ones did. Shanghai Composite, guys. Shanghai Composite still trading here a little bit. Still has a few minutes left. But if you remember, yesterday I talked about this, and I said that look, maybe this could form a descending triangle, or maybe a head and shoulders pattern. But again, a lot depends on this downside line as well. If we break it and stay above it, then maybe we could go further north. However, my only option here for the bears to kick in again is maybe to kind of get a hold up somewhere near this 100-day EMA or something like that, and then it could form a perfect head and shoulders pattern from which from here we could go lower. However, that's a lot of ifs. So it's nothing certain yet. So I would say let's keep it short and simple. And if you're looking for some higher levels, then I would say keep your eyes on that 3,100 zone. A nice good break of it may open the door to some higher levels, and yeah, we could see a nice move here higher. But of course, we have these obstacles on the way higher, the EMAs. So that's why I would say yes. If we break the downside line and the 3,100 level, I'll go a little bit higher, but we'll be very, very careful and cautious. In terms of this one, where it ended the year, well, I think I need to go back a little bit right here, and I mean it's clearly visible that it wasn't a very kind of good year here. So you can see that roughly the index lost around, let's put it this way, assume it's around 3,100, around 15%. So around 15% loss during the year. I mean, again, not spectacular. Last year was kind of flat-ish, and this one was in decline. Now, this of course raises concerns, but again, let's not go into conclusions. Let's see how next year starts. ASX 200. So I talked about this one. I said that, hey, keep your eyes on this potential idea of a descending triangle, or or a descending triangle. But we need a confirmation break here below this area, below this key support zone near the 6,994 in order to go lower, because at the same time we would break below all of the remaining EMAs. So what's next? Basically, next is the new year. Now we're finished for the year here, and in relation to where this one has ended, well, let me just go back into January here, the 4th of January, this one right here. So this is where we started. Again, not as significant loss as in Shanghai Composite, but still, nevertheless, a loss. So roughly we've ended with a 4% loss. Okay, so that one's still okay-ish. So if you have invested basically at the beginning of, sorry, not this one right here, this one, 5%, roughly around 5% loss. So if you haven't invested, in the beginning of this year into ASX 200, you would lose out, and you would have maybe, around 5% loss. Now, the German index, DAX, of course, has still 1 day left to go. Still has 1 day of trading. Okay, now, let's see what's happening here. So yesterday we had a nice push back to the upside. However, we still remained below the 21-day EMA, and that, of course, still is, or I should say, could be seen as a negative. But of course, let's keep it short and simple for now. This was already, I would say, a good sign that it rebounded strongly and pushed higher. But certainly a lot will depend on how the new year will start. Today, again, this one's a tricky one, because either today we're going to have something that's going to come out, because we don't have any economic data. Something will come out that will be able to move the market in one and another direction. But I'm not really, let's say, expecting that to happen. However, again, surprises happen, guys. The only thing is that what I would say is that either way, I don't think that this is a good day to trade. You can just keep an eye on it, like position yourself correctly for the next year, and then do it on start from Monday, and then but today it's either you go for a very, like, let's say a small trade or something like that for a small profit, just maybe to feel better about yourselves. But if you don't do any trades, I think that's a good thing to do. But however, guys, you know yourselves better. You know your trading style. You know what your risk tolerance. So the only thing is I can say that is be careful, have your stop loss in place, and don't over trade. But coming back to the German index here, so this is what I'm saying. I was saying yesterday. Look, I'm still watching these two levels, the 14,200 on the upside and the 13,791 on the downside. So clearly, I need to see a breakthrough one of these levels here in order to consider, the next maybe short-term directional move. Now, in regards to where it started this year, I mean, we'll scroll back here a little bit. There we go, Monday, October, December, January. Let me just have a look here. It's hidden again. So 3rd of January, this is where we've started. There we go. So this is where we've started, and well, again, not a great performance for the German index this year. So well, what can you do? It's part of the trading. So roughly, I would say, let's say even if it climbs back to here, I mean, roughly it's around a 10-11% loss for the year, maybe more of a 11% loss. Again, depends on how it's going to trade today, but again, not a great performance from the German index. Now, Nasdaq 100. So this one rebounded yesterday. Great, wonderful. This is what. But as you can see here, it pushed back above this 10,790 territory. And now the question here is, can we go back to this 21-day EMA? Well, I'm not going to rush into anything. For now, the cash index is sitting at around 10,900 level. So slightly below yesterday's close, but still above this little hurdle right here, the 10,790. If we continue to trade above it, I will continue aiming towards the upside, but only up until this 21-day EMA up around here. For the downside, what I need to see here is I need to see a drop below this little hurdle here, this 10,632, in order to consider a move lower. So let's see how this is going to play out today. But again, I'm not expecting some crazy moves or anything like that. However, again, if some sort of a news comes out, then that's where only the news probably could drive it. In terms of where we have ended the year, let me just have a quick look. January, there we go. I think, yep, there we go. So January, well, talk about a loss. I think this one's going to be the worst performer. The technology sector is going to be the worst performing sector. And look at this. I mean, guys, 34, roughly around 34. Let's put it this way. Maybe, let's say, even if it bounces today, I mean, okay, I'll give it through 31%, 31%. I mean, that's quite significant. And comparing it to last year, let me just do the same thing for last year. Just bear with me one moment. November, December, January, January 5th, January 4th. January 4th, that's when it started. So last year we've managed to make around 16%, something like that. I mean, at one point we were gaining around 31%, so yep, that was okay. But eventually we ended up with roughly around 16 something like that. And now we just kind of, we've not only wiped out those gains, and we actually created more losses. So if you look at it from this perspective, I mean, yeah, we let's say if we also apply the Fibonacci's here, for example, from this drop we had here in March with when COVID hit, everything got locked down and everything, the economy was in a standstill. So if you look at it from this perspective, I mean, from that low to the peak which we had last year in November, we have managed to retrace beautifully 61.8%. Now talk about a beautiful Fibonacci level here. I mean, this is just wonderful. Look at this move, guys. I mean, this is when the Fibonacci's kind of work out nicely. I mean, if you look at it from the broader perspective, of course, obviously, it's very difficult at the time to kind of examine this and think that, hey, we already did like 32.8. Maybe it's not gonna, this is where, look, this is a good example. It went to 38.2, kind of rebounded from this area, went back up, and this is where the point you think that, hey, maybe it's going to go higher, but no, it reverses, it drops back down, and goes back and removes the 38.2, hits the 0.5, should I say the 50, and then actually continues to fall, and this is where the point is, like, which you don't know. Maybe it's going to continue to 78.6. Again, it's always a gamble. It's always, the only thing is you can try to, if you want to, let's say, take a note and say, hey, maybe it's going to go actually all the way to 78.6. But for that, guys, I mean, I would say this is what it needs. I mean, it needs a clear breakout here, and this is actually where my levels come in perfectly, which I've mentioned just right now. The 10,632, that's going to be the first one that I'm going to be watching. If that falls, or should I say, if that breaks, then we have the last one, the last kind of support area, the 10,440. But if that gets cleared, this will confirm a forthcoming lower low, and 78.6, here we come. And that is roughly around that 8,910 zone. Again, quite a significant drop, guys. But the question is here, we're having this drop gradually, and this is what I was kind of thinking previously, like that if the next recession comes, for example, it might not be as severe as the 2008 one. I mean, it might not be as radical as that one, but we could have that gradual, longer term recession or something like that, which would allow human beings to adjust adjust a little bit more, a little bit better. So that's why this is exactly what we're having right now. We're having that correction. We already corrected. Look, from this huge drop in 2020 to all the way to the rally here, to the peak, all-time high, the November all-time high in general, or not actually November, just historic all-time high, and from there we already kind of retraced 61.8%. That's quite significant. But anyway, long story short, guys, I think I'm gonna run out of time again and stick to these kind of things. But anyway, guys, at this point, look, if you're looking for some further downside, I'd say stick to the levels that I just mentioned, and then we'll kind of go from there. S&P 500, similar story. Let's see how this one's doing. Well, in general, let's start from the shorter term perspective. First of all, we're below all of the EMAs. That's a bearish indication. Bearish, yes. Yesterday we had a nice retracement. That's fine. However, I'll stick to one of my patterns here, which I look at, and something like that. So we're getting a nice retracement. Let's see if we can, how much we can retrace here. I'm still kind of considering maybe a move towards that 21-day or maybe 100-day EMAs. Maybe if it provides good resistance here, another decline here could be possible. And look, this area was seen previously as a good support. I talked about it. We broke it. We moved lower. Okay, great, mission accomplished. Now we're having this moment of correction. So we've already done the 23.6. The 38.2 is roughly around this hurdle. I talked about it, and yeah, if the 50 is roughly just slightly above my level, the 3,912. Look, if we stay somewhere below this hurdle, I will consider another decline. But of course, first I'm looking at that 38.2. That's for sure. in relation to what's happening here, let's say how much did we how much did we lose during this year? Well, where's that January? Let me just find that January. There we go, somewhere here. So is this the one? The Monday, there we go, Monday. So that was Monday the 3rd of January, and there we go. I mean, quite a significant drop. Also probably somewhere around 30%. Let me just double check. Let's put it this way. Yeah, actually, oh, sorry, no, that's around 18. I do apologize. Okay, so S&P did a little bit better. Of course, everybody was jumping out of stocks, out of tech this year, and yep, the S&P kind of also followed suit. I think the Dow might be the lowest loser, or should I say, yeah, the lowest loser, if I can say express myself this way. But anyway, S&P 500. Look, good performance, or again, let me correct myself, better performance than the Nasdaq. I mean, twice as better, but still in a loss. So you probably were not very well off if you have invested in an S&P this year, and yep, this is how it ended. So, long story short, what's next? Well, guys, let's see in terms of from the Fibonacci perspective. So this is that March drop, all-time to all-time high. Look at this 50%, beautiful hit of the 50% retracement here on the Fibonacci. I mean, I think I'm drawing it. Yeah, missing the peak. There we go. Okay. I would say roughly, and still I would say that it's a great hit. So we did the 50%. Okay, we rebounded from it. We moved higher, but to be honest, I think that we might see another decline at some point, unless we start popping, somewhere above this 3,912 territory, and then yeah, we'll see how it goes from here. I mean, we still have the 200-day EMA. But if you really want to get a little bit more excited with the upside, then maybe a break above this barrier would be needed, the 4,100 level. DXY, the dollar index, so drifted lower, and look, I talked about this yesterday. We moved through this triangle pattern. We can get rid of it. It broke to the downside, and in a way, so far, it's kind of confirming everything. It's confirming that we're still within the falling channel. However, I'm not saying anything. I'm not saying that this is going to end up being very bearish. I'm going to get a little bit more bearish if we do fall below the 103.45. But if we don't, look, I've said it before. Sometimes these patterns, I do like them because they're quite bullish, because whenever you have like a strong decline here, like this, like a huge drop, and then a gradual decline within, let's say, something like a falling channel or a wedge, then you have like a potential breakout to the upside. Now, some of you might say, but hey, maybe this is a continuation pattern. Of course, everything could be. However, given that we have already, if you just look at it from the perspective that we have already dropped here and then we continue dropping, look, at some point it will have to correct higher, but will it be right now? Will it be later? That's why we have the kind of the levels in place to see if we can actually take any use of that. So, long story short, at the moment I'm going to stick to the upside. If we do break above the 104.93 for the downside, 103.45. Gold, looking at gold, look at this. I mean, it continues to push higher, and climbing gradually. Look, I talked about this yesterday. I said that if we continue to trade above this 1797, or in general the 1800 level, yes, I'm going to aim to the upside, and this is what's happening right now, and it's going higher. My target right now is the upper side of this rising channel where we're currently sitting in. After that, I will reevaluate things again. Maybe if we break here, okay, that's fine, but maybe we could see a bit of a correction lower. Look, it's in the inverse kind of situation as here. So again, maybe again, I'm not saying that this is going to be like a reversal to the downside here. However, I'm not excluding that there could be a reversal at some point, but if gold, if everybody's going to start seeing gold as a safe haven, if the equities continue to slide, then well, we might see gold actually pushing further north, despite the dollar actually. WTI oil, very quickly. I talked about this. I'm not going to spend too much time on it, basically, but yeah, we had a kind of a relatively good run. Look, from the shorter term perspective, it's still above this 21-day 200-day EMA. But for me to go for higher, I need to see a push somewhere above this 82 territory. Simple as that. Just out of curiosity, where was this in January? 3rd of January. There we go. So 3rd of January. Oh look, we are just flat, kind of, or a little bit in profit for the year for this. So if you would have invested the year into WTI oil, congratulations, your peak was in February, but then it was just down the hill. I mean, there was a chance for you to get out somewhere here in June, but if you held all the way here, well, I mean, yeah, this is this is what happens. So this is what I always say to everybody. Like, I mean, if you enjoy your profits, don't be way too greedy. If you think that this was like kind of the last opportunity for you here for in June, the beginning of June, to kind of take your profits, but if you didn't, well, you got a little bit greedy, yeah, you have to kind of guys, evaluate it this way. So I rather take my profits on a spike like that and just kind of maybe wait for another opportunity. Now the question here is, I'm going to see where it's going to end today, how it's going to trade today, and this is the level, just to remind you, the 75.35. That's the opening price, or at least on my chart here, the opening price of WTI oil for this year. And yeah, we've ended, or it seems like we could end the day or end the year in slight positive territory, but again, we still have a day to go through. Ethereum, yeah, the crypto world. I mean, I'm not even gonna probably look at this because January 1st, 2022 was somewhere around the 3,800, something like that. So it's roughly around 60% loss here. Look, I'm gonna keep it as it is. I'm not gonna go draw that one. But long story short, I'm still sticking to these areas, and we have a short-term downside line here. I need to see a break of it in order to go higher. For the downside, I need to see a drop below the 1,770 territory at least. Simple as that. Litecoin, very quickly on Litecoin. Look, I mean, after I've looked at this, and previously it broke the upside line, pushed higher. Initially, I was hoping maybe to see something like an ascending triangle here. However, yep, it didn't break it, but yeah. What can you do? That's the market for us. So January, January this year was somewhere around here. Yeah, not a huge kind of, well, roughly also maybe I think around 60%, something like that. But look, in general, it wasn't a good year for crypto, as you can see. But what can we expect next year? Maybe we'll get a rebound at some point next year. Look at it from the kind of more of a yearly perspective. If you do get a rebound of some sort, you might get these like 2 or 3 times those rebounds during the year. So try to maybe adjust your either trading strategy or if you're investing into crypto, then your investment strategy, maybe to take profits at some point next year. If you are, for example, entering right now, and if we do pop a little bit higher here, then maybe we could enjoy some profits. But hey, look, nothing's guaranteed, unfortunately. So everything carries a risk. Unfortunately, we have to kind of play with those rules. AUD/USD. So looking at this picture here, also you will probably see that we have ended the year in negative territory on this one. I would say, look, January was somewhere around here. There we go. Yep. So yeah, we ended the year in negative territory here for this pair. It's trying to recover, but I don't think that it will do much. I think that everybody will be waiting for next year to see what's going to be happening with the equity world. But at the moment, from the technical perspective, you can see that AUD/USD is trying to push higher. Look, we have a important resistance here near the 200-day EMA, near the 0.6814. I talked about that level, and yesterday I said that I need to see a pop above it in order to go a little bit to the upside. AUD/NZD, one of my favorite ones. Look at this beauty. I mean, I talk about nice kind of technicals here on this pair. Look, we've managed to reach all my targets here to the downside. 1.0504 was my last one, but we overshot that one even. Let me just probably grab a line here and mark it. So we managed to reach an area near the 1.0468, from which we rebounded, pushed higher, broke the downside line here, and moved higher. And we did get a bit of retracement, but the 21-day EMA provided us with fantastic support. Look, given that I always refer to this pair as a very technical one, I will say, if you're looking for some upside, 1.0765 level, that's what I'm going to be keeping an eye on in order to go to the upside. My next target will be somewhere around here, near the 100 and the 200-day EMAs. And the level that we have around there is also marked near this level, 1.0883. So good potential target, but a confirmation break here is required. For the downside, I need to see a drop below the 1.0564 territory right here, and then we'll go a little bit lower. USD CAD, very quickly on this one. Now, USD CAD was a good performer. This pair, yeah, showed, where's that, January 1st or 3rd, whatever, yeah. So January 3rd, somewhere around here. So yeah, we had a fantastic good move here. 1.2625 roughly, and we're currently 1.3550. So good result here if you have invested into, or if you have invested the wrong way, maybe of saying when it comes to pairs, but let's assume it's an asset. If you have invested in USD CAD, then yes, I mean it could have, it made you some good profits here. So. In a way, what's happening here is the same thing. I'm still waiting for a clear breakout through one of these levels. Look, I'm not going to spend too much time on this because I already talked about it. If we're gonna get a nice breakout through one of these levels, then yes, this is when I will consider the next short-term directional move. USD JPY, very quickly on this one. So beautiful hold up near this downside line. I talked about it yesterday, and I said that hey, in order to go higher, we need to see a break of this downside line and a push somewhere above the 200-day EMA together with the 21-day EMA. Now, this level here, the 133.63, I think I will adjust it, and I will mark the current highest point of this week near the 135.50. So if we get a nice pop above it, yep, this could attract more buyers. For the downside, I'm going to take a very conservative approach here and wait for a drop below the 130.40 level, and then we will go from there. USD CHF, very quickly on this one. So yep, it's still in a little range here, so I'm waiting for that clear breakout in order to to consider the next short-term directional move. For now, I will say that hey, yep, I need to see for the upside, I need to see a break above the 0.9348. For the downside, I need to see somewhere a drop below this area between the 0.9195 and the 0.9216. So I'll start looking at the downside on a break of that one, and then get more confident on a break of the 0.9195. GBP and ZD. So look, I haven't looked at this one for quite a while, but what I wanted to show you here is that similar story as with kind of the US dollar in a way. So look, we had a decline, and then we kind of got this this falling. Wrong. Oh, there we go. One more time. This falling channel here, something like that. Now, it's not an ideal one, but something like that. I mean, like I said, that's not an ideal one, unfortunately, but hey, so far it's working out. And look, in order for me to go lower, I need to see a break of the lower side of this falling channel and drop below the 1.8958. For the upside, I need to see just purely a break of this upper side of the falling channel, and then yes, I'll get a little bit more excited with the upside. GBP JPY, I think I'm running out of time, guys, already. I need to jump off my session right now. I need to clear up the air for the next speaker. So but yeah, guys, I'll I'll try to be very quick. GBP JPY, a drop below the 158.60. This is what I'm looking at for the downside. I've mentioned this yesterday. For the upside, I don't have a clear level yet. Maybe, just maybe, this one, the high of this week, the current highest point of this week, near the 162.33. A nice good pop above it may attract a few more buyers to drag it towards this downside line. Euro against the Turkish lira, guys, something that you don't look at very often probably, but hey, it's great to look at because we are quite technical here as well, because look at this picture. We have a barrier, the 20.01. It's still holding up here, and yeah, in order to go higher, a break of that barrier is required. However, will that happen for sure? That's a good question. At the moment, I'm just observing the price action and yeah, just monitoring the situation here. But let's put it this way: keep your eyes on this. It could be quite an interesting one. EURUSD finally. So EURUSD again, very quickly in terms of where it started off the year. I need to scroll all the way back here. Yep. So yeah, we kind of ended up with a little bit of a loss, but hey, that's okay. Overall, what I said before, that look, in order for me to go higher, I need to see at least a push above the current highest point of December. I think that it will remain like that, so the 1.0736. And if we do push through that, then yes, I'll go to the upside. For the downside, I need to see a break of this lower side of the rising channel. Simple as that. So guys, that's it for this session, and thank you very much for sticking with me this year, guys. Thank you very much. This is going to be like, yeah, of course, the last session this year, this week. But yeah, looking forward to catching up with you on Monday, as always, on at 7 o'clock GMT time. But yeah, guys, have a wonderful new year. Like I said, try to come back in the new year fresh, relaxed, and with a clear mind. And then we can attack the markets again, and and see what they have prepared for us for 2023. Maybe it doesn't look very positive. However, let's squeeze at least some positivity out of it, or at least try to do that. Try to do that. Anyway, guys, happy New Year, and I will see you on Monday in 2023. So yeah, guys, thank you very much, and bye bye.